I fundamentally believe in abundance, and it's a gigantic pie, and there's plenty for everybody to win. And that said, I'm highly competitive, right? When a friend of mine gets a deal in a neighborhood that I already own a property in, I go, it's a little bit of a tinge of how did I not know about that deal? But at the end of the day, I'm happy because now I know there are two responsible ethical landlords in the area, property owners in that neighborhood, and that's going to help raise the value of each other's properties.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder and CEO of Zana Investments, Tim Little. And on today's show, we have with us Ed Mathews. Ed is a seasoned real estate investor and the founder of Clark Street Capital. With over a decade of experience in the industry, Ed has built an impressive portfolio of multifamily rental properties in Connecticut and the Southeast US. Over the years, Ed worked tirelessly to grow his business, juggling his corporate job and real estate investing. Finally, in 2018, he left his corporate job and devoted himself to his passion for real estate. Ed, welcome to the show.
Thanks, Tim. Good to see you, my friend.
Yeah, good to see you as well. I'm glad to have you on. So I gave everyone a very high-level overview of your background, but on the show, we really like to get into the details of how you got started on your journey. So please take us back to the beginning and tell us how you got to where you are today.
First and foremost, I married really well. I married above my station, and fortunately, almost 27 years later, I still like her and she still likes me. So that's good, at least most days. I like her every day. Sometimes she likes me. But I'm a guy and I'm prone to doing dumb stuff. The short version of it is that I'm a geek, right? When I get into a subject, I like to go elbow. I like to really get into it, right? And corporate America, that was sales, marketing, and the subject matter of the software and services I was selling. In real estate, it's everything that I can possibly consume. I'm a voracious reader and podcast listener, and I'm YouTube video. I'm always in intake mode. Unless there's a basketball game on, I'm listening to some form of a podcast or video. As far as my journey goes, so I spent about almost 25 years working for Silicon Valley companies, most of which you've never heard of other than DocuSign, which was the last one I worked for. And I various number of roles, mostly sales, marketing, operations, and then at a couple of different points in my career, I ran companies. And I learned a lot in those days, but the challenge was I was traveling all over the world, 150 plus nights a year. And at that point in 2018, my oldest was just entering high school and my youngest was just entering middle school, almost junior high. And it's really hard to have, and I know you have daughters as well, you'll experience this at some point in the very near future. It's really hard to have an influence and an impact on your kids' lives from a Courtyard Marriott somewhere in the Midwest or elsewhere, right? And I would love to tell you I had a plan the first moment that I picked up the Robert Kiyosaki's book, Rich Dad, Poor Dad. In all candor, I didn't. I loved my job, my corporate job. I had a blast doing it. I helped a lot of people get where they wanted to go, and I got where I wanted to go. So it was really, frankly, my wife and I sitting down and she's like, Ed, you're missing so much good stuff at home. And she was right. And fortunately, I had started a side hustle where first property I ever bought was a 4-family in East Hartford, Connecticut on Clark Street, which hence the name of the company. And I would flip a couple houses, take the capital, buy another multi, flip a couple houses, take the capital, buy a multi, rinse and repeat for better part of 7 years. And right along in parallel of that conversation with my wife, Patricia, about missing all the good stuff, we realized that our portfolio was throwing off enough cash that it basically replaced my income. And so initially that was the college fund. And we had gotten that pretty much taken care of. So we focused on, okay, what's the exit strategy look like? And I sat down and did the math and talked to my accountant and tried to get my accountant to talk me out of it. And he said, no, actually, you can do this. And I gave my notice within a week of that. And 60 days later, I was jumping headfirst into real estate full time. And that was February 2nd of 2018. And I have not looked back. And That's one of the best decisions I ever made.
Yeah, so much to dig into there.
Yeah.
A lot of things that I certainly identify with. Like you said, having kids, that time is so short. And I'm
Right.
sure you know this even better than I, having daughters that are a little bit older than mine. It just goes by so quick and it is heartbreaking. I'm at a Candlewood Suites right now as we speak, and I'm here for 5 weeks. And to hear your 4-year-old say, Daddy, why are you gone all the time?
Right.
It's it
Right.
hurts a little
Yeah.
bit.
It's a little gut wrenching. You literally have 6,570 days with your kids from the day they're born to the day they turn 18. That's it.
Yeah, and that really puts things in perspective, especially when you put a number on it. So, yeah, that's good to know. I'm actually going to write that one down. And so, one of the other things you talked about was you read Rich Dad Poor Dad and find me a real estate investor who hasn't. But I think to your point, not everyone is in a place to action on it. Maybe
Yeah.
the first time they read it. Like
Right.
maybe the first time you read it, you're like, oh, that's mildly interesting. Or, oh, you get the concepts of having assets over liabilities. And that's what resonates with you
Right.
at that time. But sometimes you need to build the context around you in order to get some of the other lessons that you talked about, which is like real estate being that key vehicle. I know that's the way it was for me. I read it the first time in, I don't know, like 2004, and then life got in the way and I didn't do
Right.
anything with real estate for 10 years. And then I read it again and I was in the right mindset, the right situation to actually put those lessons into action.
Yeah. So I was, 2008 was when I read that book. And I tell people I read Rich Dad Poor Dad in 2008. It fundamentally changed my life 3 years later. And so it wasn't until 2011 that I actually pulled the trigger and bought that 4-family. It's interesting. One of the things that I love to do is coach and mentor real estate investors who are still trying to figure it out. I affectionately refer to them as the dreamers, right? They're the folks that stop you in the grocery store and say, man, I really wish I had time to do what you do for a living. And I look at them right in the eye and I was like, what's stopping you? And because I was working 80 hours a week and had a real estate business on the side, and I got 8 hours of sleep every night. It can be done. It's just a matter of priority. When I meet new investors or investors who are just getting the gumption to move forward, the three things I always hear from those folks are, I don't know where to get deals. I don't know where to find the money. And I work 60 hours a week. I work 2 jobs. I've got a wife and 3 kids and people I take care of and other responsibilities. And that is absolutely true. And it just comes down to priority, right? But when I hear one of those 3 things, behind that, when you start asking questions, which I tend to do, the answer is almost always, I'm afraid, in one shape, in one form or another. And I think fear it's what stopped me. It wasn't life. It wasn't that I was not prepared or didn't have the information. I knew a lot of the things that I needed to know already when I read Rich Dad Poor Dad. I was afraid. It was a gamble. And at least I thought it was a gamble. And so it took me 3 years. In fact, a funny story, I'll tell you the family-friendly version of it. Amy Rio, who is now one of, if not the biggest broker in the state of Connecticut, back 12, 13 years ago, she was a broker with 3 or 4, maybe 5 agents. And for whatever reason, she either saw something in me or took pity on me and took me out to see 20 properties. And I would always find a reason to say no. And we got to be friends. And that's probably why she didn't kick me to the curb. But the fact is that we pulled into Clark Street and I looked at the property and it was bones were great. It was in the middle of a rehab and the person who was rehabbing ran out of money. So they had to get rid of it. And so I walked around, looked at it and, it needs a new roof. Oh, it's white. I really prefer different colored buildings. And, there's a stained glass window in this one. Those are hard to replace. And Amy nodded and basically I could see her pulling something out of her briefcase and she put it very gently on the hood of my car and she took out a pen and clicked the pen and she said, look, I've shown you 20 deals and you have found a reason not to offer on any of them, So here's the thing. And now you have to see the visual here. I'm 6'4". Amy is 5'2". And I was terrified of her because the next thing out of her mouth was, sign. This is the best deal I've found for you in any of them. Sign this contract or never call me again. And I'm like, okay. And I took the pen and signed the document and still own that property today. Thank you, Amy, wherever you are. And yeah, so, overcoming fear, sometimes it takes a mentor like Amy to kick you in the pants, and sometimes you just get ready, but everyone's on a different journey.
Yeah, absolutely. And I think an important point there that you raise is, yeah, it's hard to overcome that fear. And when you have that fear, you'll never run out of reasons not to do a deal. No matter how good it is, if you want to, you'll always find a reason why maybe it's not the best deal. And like I know she told you, hey, there's no such thing as a perfect deal, right?
Nope. And the fact is that my hand basically shakes on every contract I sign, because I think if you're not nervous or you don't understand the magnitude of the responsibility you're taking on, both to the people that are going to live there and your family, and frankly, your investors, if you've taken outside capital.
Yeah. And I think like one thing that I tell people, because at one point or another, we're all in that situation where real estate looky-loos, like
Tire kickers.
we're interested in it, and we know it's a good thing and we should do it, but we're not actually real estate investors until we buy some real estate.
Correct.
And so that taking action piece is huge, not just for the sake of doing it so that you become a real estate investor, but because it gives you that confidence, like, hey, this is real now. Hey, I really am a real estate investor, and I'm not just listening to the podcast or reading the book.
Right. Yeah. And you said the right word, action, right? You act. It is, if I've learned anything from my days in the startup world and now here in the real estate world, taking action, having a bias towards action separates the folks that dream about doing anything and the folks that actually do it. It's literally that simple. You have to decide to act. That's it.
Yeah.
There's no secret sauce.
And you've been doing this for a while now, right? Like it's been like a
12,
decade,
almost 13 years. Yeah.
Yeah. So when you start coaching these people, what is the first advice that you give them when they're getting started on this so that they can last in this, I won't call it a game, but in this business?
Yeah, I refer to it as a game as well. So I'm, just to be clear, I don't have a formal coaching program. What I tell people when I meet them along the way is, like, I was a partner in the local Rehab for a bunch of years, and I've since left to focus on this business, but it got to be too much to do both. And I tell people all the time, I'm a cheap date. I will, over a cup of coffee or a Zoom call or whatever, standing in the grocery store in the produce aisle, you ask me any questions in the 20 minutes or 30 minutes that we're together, I'll tell you everything I know. And I'm happy to do it. I love to see other people succeed. I fundamentally believe in abundance, and it's a gigantic pie, and there's plenty for everybody to win. And that said, I'm highly competitive, right? When a friend of mine gets a deal in a neighborhood that I already own a property in, I go, it's a little bit of a tinge of, how did I not know about that deal? But at the end of the day, I'm happy because now I know there are two responsible, ethical landlords in the area, property owners in that neighborhood, and that's going to help raise the value of each other's properties. All good.
Yeah, and I think the one thing that I'm continually surprised by, especially in the like commercial multifamily world, like people always seem to be giving of their time. Like you talk about it being competitive, and it can be, but at the same time, like many people don't seem to have that scarcity mindset of, oh no, the pie's almost gone. They know there's always deals out there. So that kind of alleviates that concern. And then it leads people to, I think, have better business practices because they're not trying to stab each other in the back just to get a deal.
True statement. I'm notorious for, like, when I was flipping houses and there'd be an auction coming up, I would walk through the house and I would very loud with either one of my partners or the real estate agent, Allison Gentile, who I work with a lot. I would say, I don't understand, and top of my voice, I don't understand why all these people are in my house. This is my house. And most of the people looked at me like I was crazy, but I was more or less having fun with them. Most of the people there thought that was funny, but occasionally not so much, but that's okay. The whole idea here is that a rising tide, especially in a market where every property is tied to the next property, rising tide does float all boats, right?
Yeah. And let's go back to the flipping thing, because I think that's
Sure.
interesting. You basically used it as a way to raise the capital so that you could buy those longer term, it sounds like small multifamily properties,
Correct.
which I think is an interesting strategy. And I haven't heard many people talk about doing it that way. Talk to me
Yeah.
first about how you
Don't.
did have, yeah. So that's what I want to hear, pros and cons, and how did
Right.
you possibly have the time to do something that is inherently more time intensive, like flipping, while having a full-time corporate job?
Team is vitally important. And so was fortunate that I had a construction crew led by a guy that I've known for a long time and I trust. And I've trusted him with my kids, so I can certainly trust him with my houses. And so that was key because I was running this back then, I was running it off of my laptop, right? And because I was not in Connecticut most of the week, every week. And we would buy a property on Saturday, put it under contract on Saturday, and close it a few weeks out from that. And in those few weeks, we'd walk the property, come up with the plan, and me and Eric would agree on it. And I'd hand him the keys and the scope of work and say, okay, I need this back in 90 days. And yes, sir, no problem, got it. And actually, I don't think he's ever called me sir. But the fact is that he and his team would come in and first passes, make it clean and safe, then upgrade kitchens, bathrooms, paint, flooring, make it look as new as humanly possible. Most houses that we did, we tended to just very slightly over rehab because I wanted them to stand out. Instead of granite, we'd use quartz. We'd use a little bit better cabinet. We'd use a little bit better flooring. And it just made the buildings, these properties pop. And I'm talking a couple of percentage points more, not 10, 20% more. And what that allowed me, because I had a team that I trusted, it allowed me to do my day job, not have to worry about in the hours that I was working there. And then at night, I'd catch up with somebody on the team, usually the boss, and was like, all right, I usually had just a handful of basic questions. What'd you get done this week? What are you getting done next week? What's standing in your way? And what questions do you need me to answer before you move forward? And those 4 questions are the 4 questions I use every Friday afternoon with every single one of my contractors so that I know where they are and what they're doing. At some point, we'll have a really cool technology that works on the phone and they can update and we don't even have to talk and all that. And I'll know exactly red light, green light, yellow light, where everything is. And when they find a technology that contractors will use religiously, I'm in, but they haven't invented that yet. We still have to deal with human beings, human to human on the phone or in person.
Yeah, that's awesome. So what I'm hearing is basically the teams and the processes are the key to being successful in running something like that.
I am a big systems person. So there is a checklist for pretty much everything we do here. And the reason being is that I'm a Boston fan, so there's the Patriot Way. And so I've coined that, and it's the Clark Street Way. And the Clark Street Way is an ever evolving method, but the fact is that whether it's me or one of our property managers or somebody else, we know exactly what to do when a certain situation happens. And we train on it. And it's all down on paper. Actually, it's down on PDFs and everybody has access to it.
No, that's awesome. So tell me a little bit more about your multifamily niche. Are you focused mostly on the small multifamily properties?
Yeah, so I am focused. So all but the 4-family on Clark Street that I owned in 2018, I've sold them all and I traded up. So basically what we did was sold off all the 3s, 4s, and 5s. And now I focus on 6 to 20 units here in Connecticut, still value add. I affectionately tell people that I buy crappy apartment buildings from landlords who aren't very good at their jobs. And the idea being that we'll go in and because of my flipping experience, building problems, unless the bones are gone, right? Pretty much my guys can fix anything. And first pass is make it clean and safe. So that's all the knob and tube, that's all the lead, that's all the things that could cause somebody a problem, all goes. And then in parallel, we upgrade the common areas and we start rebuilding the relationships with the residents. And that can range from introducing them to our customer service team, our property management team. And I was at a Jake and Gino I was at it, and one of them had said, we want to be the Chick-fil-A of property managers. And I said, that's exactly what we talk about, right? Because the way that we interact with our residents, most times the reason that somebody's selling a building is because either they've run out of money, the building has gotten too costly to manage, or the relationship with the residents is fundamentally broken. And it's usually more than one of those, right? And as we're going through clean and safe, as we're upgrading common areas, right now it's still me. I knock on every door and I introduce myself. And all my friends in this business are like, no, don't tell them that you're the owner. And I tell them, look, the buck stops with me. And I understand, we are rapidly understanding exactly what's working and what's not in this building. And we fundamentally want to fix it. And here is your packet to ask for help if you ever need it. And here is access to our platform, our property management platform. Here's the phone number you call when you need help. And what that does is it shows them there's a new sheriff in town, for one thing. It also shows them that I actually care, and that I want them to be proud of where they live and have a clean and safe home that they can raise their families in. And I'll get into the back end of that in a second, but that is our basic process. And then as units come open, we upgrade them and we bring them up to market, right? And so it's a simple business. The reason that I'm so focused on customer service is for resident retention, right? Because in our world, one of the most expensive line items on our T12 is turnover, right? You've got to make ready, you've got to lease up, and all of those things are expensive. Both of those things are very expensive. And our goal is to continue to extend the amount of time our residents live in our buildings. And so I think the average tenancy in Connecticut, last time I checked, was like 16 months, which is surprising. Like, they're moving every year and a half, and that's a lot. And we measured this every quarter. Our metric for residency tenure is just over 3.5 years. And
Wow.
you take a 10-unit building on the left and a 10-unit building on the right, they're identical. They charge the same amount of rent. I guarantee you mine's more profitable, guaranteed, because our residents stay longer and I don't have to spend, hundreds to thousands of dollars doing make ready work and lease ups, which are not cheap here, right? It's a full month's rent. $1,000, that's $1,000 just to get the lease signed.
Yeah. And I think that's something that people don't take into account enough when they're looking at the numbers, right? Is psychology, just straight human
100%.
Psychology.
Yep.
And if tenants feel welcome, and then if they know that change is coming because maybe that last owner wasn't doing what he was supposed to be doing, keeping up with maintenance, whatever the case may be, if they see change, whether that's you knocking on their door or that new paint was the first thing you put on there, or these upgrades that they have to see in order to know that the change is happening, that makes a huge impact, both, like you said, for anyone who may have planned on moving right away. And then also in terms of being able to bump rents, right? To market. Some people may fight against that, but if they see that the improvements are being made and that the additional rent they'll be paying is worth it, then they're more willing to do that. And
so the way that we manage that, there's a couple of different strategies we use. One is for whatever reason, on average, we lose 25 to 40% of the residents in a building right out of the box. The relationship's too far gone. They've already made plans. They don't like rules, whatever. There's 100 different reasons. And part of the conversation I have when I knock doors is we have a really simple relationship. Our relationship is we will provide you with a clean and safe place where you can be proud to live for as long as you want. And we need you to prioritize your rent on the first. And as long as that happens, we're good. And if something bad happens, pick up the phone and call us. We'll work with you. And they hear this from me, the boss. And all my friends are like, why would you tell them that? I said, because they're human beings. If COVID taught me anything, it's that people want to be respected. And fortunately, we had amazing tenants and only had one or two that kind of went in the bunker, so to speak. And I ultimately went and knocked on the door and stood 10 feet away after that when it opened and told them, I was like, look, I'm a human being and so are you. I'm never in a million years going to make you homeless in the middle of a pandemic, but you got to talk to me. We got to work this out. And in those two cases that come to mind, All we did was we extended the lease and worked out a payment system. So, okay, fine. You are out of work for the last 30 days. Yes, I understand. You're going to be out of work. Your boss says you can come back in another 30 days. Okay, cool. So that's 60 days. So we'll just take those 60 days. We'll put it on the back end. And now you have a 14-month lease. Are you good with that? Yes. What else do I owe you? Nothing. That's it. Right. We'll figure the rest of it out because I'm going to own the building for 30 years. Right. And now those two families are some of our best tenants. I had more than one colleague in this space tell me I was crazy for doing it that way, but I sleep really well at night.
Yeah. And so you just mentioned having that building for 30 years. Is your intent on all your purchases to hold for the long term?
Sometimes. So I buy every building with the intention of holding it for I'm 53, right? So the next 40, 50 years, hopefully, God willing. But there are opportunities, right? When we sold off our small portfolio, we did that intentionally so that we could then upgrade. You sell a 4 and you buy a 10 unit, you sell a 6 and you buy a 12 unit, right? And that's how the game's played. And so where there's opportunities to 1031 exchange out and do that, we'll certainly do that. There are a lot of buildings that we track from an asset management perspective, the projected value of probably like everybody else, every building over the course of time. And if someone from outside the market comes in and says, in year 3, I'm going to pay you your year 6 value, I don't always say yes, but I do a lot. And
Sure.
Everything I own is for sale.
No, that totally makes sense. It's just unique because a lot of times we have like large multifamily syndicators on the show. And I go to a lot of these conferences too. And you'll always hear them say, hey, bigger is better. It's the same amount of work, yada, yada,
Sure.
yada.
Yeah, they're not wrong.
They're not wrong, but there's pros and cons, I would say, to both approaches. I play in that space too. And so you certainly get economies of scale when you're dealing at that 100 plus. But it's a completely different model once you start talking about syndicating, bringing in investor capital, et cetera. The advantage you have with the smaller multifamily is owning a bigger piece of that pie, whether it's just you or you're joint venturing. And then you can do things like the 1031 exchange that you just talked about, where you
Right.
can play that little monopoly game where you got the little houses and you trade
buy
up for that.
Right on.
Yeah, for the hotels. So it's not that it's wrong, and it's just a different approach.
Yeah.
And it can make just as much, if not more money than the going big with many people on a syndication.
Yeah, I agree to a certain extent. I would add to that, though, that the motion is the same, right? Whether you're buying a 10-unit building or a 100-unit building, the big difference, as you pointed out, was the capital raise. And so I'm okay owning 100% of a 10-unit building. I'm also okay owning 10% of a 100-unit building, right? Same money as far as I'm concerned. And typically with those larger buildings, I have more help. Right. And the help in terms of partners, whether joint venture or syndication, limited partners or whatever. Right. And so it is, like I said, it's the same motion. It's just a matter of deciding what the right opportunity is for you at the moment you are where you are in your journey. And for me, that's changing, but only because of why I'm doing this. And I'm looking to build generational wealth. My wife, pretty good chance my wife's going to outlive me by a lot. And I say that because my family tends to go to the great beyond in their mid to late 80s. And her family, especially the women in her family, tend to live in their low 100s. There's 10, 15, 20 years. She's going to be doing whatever she's doing, and I'm going to be somewhere else. And I need to know that on that day when I lay my head down for the last time, that she's going to be okay. And so I look at this multifamily portfolio as an annuity. And so that if she needs additional care, or whatever else, that there's cash flow and value there that she can take advantage of to be able to give her whatever she needs. And she is Patricia. But the other part of it is it's also for my kids in that I don't know how much is going to be passed down to them. I hope it's life-changing for them. But even if it's not, I'm relieving them of the responsibility of having to financially care for their mom. And so that's really important to me. I want them to go live their lives. And the vocations that they're contemplating right now, I've got one in college and one in high school. Neither of them pay really well. So I hope I leave them a lot of money, but we'll see.
Yeah, it's okay. They'll probably change their mind 10 times within their first year of college.
Without a doubt.
No, and I think, and again, the only reason I'm hitting on this is because we don't talk a lot about it on this show, the whole small multifamily.
Yeah.
There are some advantages too. And what I see with folks who are doing the smaller multifamily is that they can become like a regional play. And it
Right.
sounds like with you in Connecticut, that's the case because people get to know you and then you can go direct to seller and you build a reputation.
That
And
is
with those smaller ones, it's like you said, it's usually mom and pop. So maybe they don't have the same focus on systems and processes that you do, which
true.
can also make it harder, actually. I don't know if you want to talk about that.
It can make it harder in that I have this conversation multiple times a week, every week lately. And that is that asking price is a lagging indicator to reality. And so I'm still seeing, particularly here in the Northeast, in Connecticut for sure, owners who have a vision of it's still March of 2021. And so the prices are commensurate with that time period. And the conversation I have with them is, I am happy to pay you that price if you give me March 21 terms, right? So if I can pay you 30 years AM for at 3.5%, 4%, I will absolutely buy the property for the number you're giving me. However, if you are not in a position to do financing, then I have to go back to reality and borrow money at 6, 7, 8%, which changes the value of your building. And some people get it and we work out a deal. Some people don't. And I'm just waiting. We'll see.
Yeah,
So-
and that's a really good point. I was going to ask, how often are you able to do seller financing?
Very
these
rarely
properties?
these days. I'm starting to see it more and more. Back in 2014, 15, 16 through maybe 18 or 19, I saw it a lot because it was a means of managing tax liabilities and you still get to benefit. It still becomes an annuity, at least for a period of time until the new owner refinances, that you're getting your couple $3,000, $4,000, $5,000 a month in payments, which is nice. You have to obviously own that building free and clear to be able to do that. And there aren't a lot of those. Now I'm seeing that there are a handful of our money partners who are okay with us being in first place, but know that there's a second mortgage in place that's seller financing, one in particular that we're working with. And so I'm still not over leveraging. We still put 25% plus down, but knowing that we can lower the bank exposure and maybe do a loan for 50% of the loan to cost and then finance the rest with the seller. There are deals out there. In fact, we're negotiating a couple of them right now. But I think they're rare, but starting to come back, I guess, is the real answer.
Yeah. And I guess when I talked about the less professional mom and pop owners, one of my concerns would be just like, what is the state of like their bookkeeping, for example? Have you ever had one of those horrific scenarios where you walk in and they're like tracking everything on a paper or something?
Yeah, we recently made an offer on a 16 unit building locally, and the seller said, I don't have any books. And I said, you don't pay any bills? You don't collect any rent? He said, no, I collect rent, but they pay me in cash. I'm like, oh boy. Okay. So show me your electric bills. And they don't have, he's rummaging through a box of unopened envelopes. And that's a real story that actually happened about 6 months ago. I find most of the folks are conscientious in terms of keeping track of their books. I have inherited, or I've seen a lot of handwritten balance sheets and profit and loss statements, a lot of them, especially with folks that have owned the building for a long time. And that's fine. We're pretty flexible in terms of, I just need to get to an understanding of what is reality. No judgment. I just need to know what the real deal is. And if I can get 80 or 90% of the way to that reality, I'm okay. That we can manage that risk through the rehab work, our inspections and all that, and be able to move forward. Yeah, I live in this micro family, whatever the term is, but it works for us. In order for our goal, my goal is to get to 1,000 units by the end of 2025. There are 1,208 buildings in the state of Connecticut that I want to own at some point. So I don't like my chances to be able to do it here. And that's why we've started to expand and down into the Southeast, mainly because that's where the much larger complexes are. I'm negotiating on a couple that are like 35, 40 units. We just put one under contract in that same range down in North Carolina. And assuming that gets through due diligence, we'll plant a flag in Raleigh and then really focus on that market and find those 1,208 buildings that we want to own in that area. And then we'll build out our team there as well. We go slow. It's not a race.
Yeah. No, I appreciate that insight. That was super helpful. We do need to transition into the turbo round.
Bring it on.
All right. So I'm going to ask you 3 questions, some pretty quick succession, and I just ask that you answer them honestly. All
No
right.
problem.
First question. What is one red flag every investor should look out for? And that could be either a passive investor or an active investor.
So I pay very close attention to character and integrity. So if I get a whiff, and I've got a pretty good BS detector, if I get a whiff of somebody not being totally straight with me, that is a major red flag for me. I look at eye contact, I look at body language, I listen to the words they say, and I lock in. I really need to know that I don't have to like the person I'm negotiating with, but I do have to respect and trust them, at least at some level. And if I'm dealing with somebody that has no integrity and is going to tell me what I want to hear, most of the time I can sniff it out, and most of the time that's a deal I don't do.
Yeah, that makes total sense. And it does help if you like the person. You're
Absolutely.
right.
Yeah, I like people, but I don't have to like you in order to buy your property.
Okay, second question. What is a myth about this business that you would like to set straight?
Can I do 2?
Sure.
All right. So the first one is that HGTV lies to you, and it's nowhere near as hard or as easy as the personalities on TV tell you it is. My wife won't watch those shows with me anymore because when they run through the budget, I'm like, slow, that's wrong. And she's like, I can't watch with you because, I actually get angry at the TV. So that's one thing, that TV lies to you. And I hope that's not a surprise to anybody out there. The other thing is that a myth is that it is a team sport, and it is okay to not be the only person who wins. And what I mean by that, it's okay not to own 100% of a property, right? And in fact, it allows you to go a lot faster, as I'm learning, when you do have partners, whether they're money partners, operating partners, or something else. It allows you to manage risk because there's more people and more brain power. And it allows you to function at a higher level because there's more hands and feet to be able to do the stuff that needs to be done.
Yeah, no, absolutely. All right, final question. What does success look like to you?
So I equate success to time. And so one of the huge payoffs of me leaving corporate America and doing this is time with my kids, time with my wife, time with myself, which I rarely got. My oldest daughter was a competitive swimmer, and I got to see almost every single one of her swim meets. And she did great. And I think she really appreciated that I was sitting in the stands cheering her on. And likewise, my younger daughter is a singer and a really good softball player, and I haven't missed a choral concert, and I've missed a couple of softball games, but I can count them on one hand in the last 4 or 5 years. I think that they appreciate the fact that I'm there being one of their biggest cheerleaders. And hopefully that's having a solid positive impact on them.
Yeah, absolutely. I'm right there with you. All right, Ed. Hey, this has been awesome. Please tell our guests how they can get a hold of you and if there's anything else that you'd like to share with them.
Yeah, the easiest way to get a hold of us or me is through the website, clarkst.com. But you can also find me on social media at Ed Mathews with 1 T, by the way. Ed Mathews on Facebook, Instagram, LinkedIn, Twitter, YouTube. And then we also have company pages on all those channels under Clark Street Capital. And then the last way to connect is through our podcast. Like I said, I'm a cheap date. And I love helping people understanding where they are and where they're trying to get and helping them get there. And one of the ways that I scratched that itch, I was very fortunate to have 5 or 6 really amazing mentors over the years. And they helped me and never once asked me for anything, short of like me buying them breakfast. And so the way I pay it forward is through mentoring and through the podcast. It's called The Real Estate Underground, and it's everywhere on every channel you can possibly find, Spotify, Apple, all that. But we do what you do, Tim, in that we bring in real estate investors, mostly from the multifamily space. But occasionally I'll have an industrial CRE guy come in, or a cost segregation person, or something else where someone else whose expertise I think will benefit the audience and drop a few gold nuggets in the half an hour or so that we're talking. It's a lot of fun, and we add a lot of value.
Yeah, and we'll definitely have all that information in the show notes. Ed, hey, I've had a lot of fun, and I
Me
think
too.
the audience learned a lot here. So I appreciate you coming on, and I look forward to
Likewise.
continuing to see you do big things on your journey to multifamily millions.
Same here, Tim. I really love your show, and I'm grateful for the opportunity to come and speak on it and meet with you. And it's good to see you again.
You too. All right. Hey, have a good night, Ed.
You too.